You were listening to ChartingWealth.com for Wednesday, the 12th of July, 2017. We see the S&P 500 down just a little bit for the day, 0.08%. The Qs, that's the Nasdaq 100, up 0.28%. TLT, that is the 20-year bond fund, up 0.17%. And gold up 0.13%. Let's jump right in on the weekly chart. Taking a look at the S&P 500, we see a steady down move. Again, not super strong down moves, but continuing to move down. And of course, the movement's still below the 2-day and the weekly line. We see an acceleration on the down movement by the derivative oscillator and just steady downward move by the price percent oscillator, which is, of course, our number one indicator. And let's continue to sort of delve in just a little deeper. We see on the 2-day chart really been sliding sideways since the 10th, which was Monday, and we're just starting to form a new candle. So that 2-day chart on Monday represents Friday and Monday, the prior Friday and Monday. And again, what we have forming so far is a doji. Again, some indecision at that 2-day level. Derivative oscillators losing some of its energy. And we've seen over the course of the last 3 days, the price percent oscillator continuing to move down in about the same direction or power. Look at the 4-hour chart. We can see that it did cross over the morning of the 10th, Monday the 10th, sort of hit its top in the afternoon, dropped over in the morning on the 11th, and then sort of a spinning top, not a lot of movement in the afternoon. So we'll continue to keep our eye on. We're still below the weekly trend line, and we're below the 2-day trend line as far as that movement goes on the 4-hour chart. If we do see a big penetration of that, warning bells ought to start going off. Don't like the fact that the 4 hours crossed back over, but again, this market just doesn't want to top out. It's trying not to do so, but there seems to be a lot of weight, particularly by looking at this weekly chart, pulling it down. Now let's keep moving through. We see on QQQ, the Nasdaq 100 so far the week, up just barely, but the derivative oscillator continues to move down, as does the price percent oscillator. Of course, we are in a move at this point as far as the weekly chart goes, or that weekly vertical crossover all the way back on the 16th. And when you look at the weekly chart, everything continues to push down. Now that changes a little bit as you get to the 2-day. We have over the course of the last 3 days, the 2-day candle ending on the 10th, and the first day of the 2-day candle on the 11th. We see up moves, of course, up 0.28%, a little over 0.25% for the day. It has penetrated the 2-day trend line. It's gone flat on the price percent oscillator, and derivative oscillators losing energy. Still below the weekly trend line. By all means, if that weekly's penetrated, you definitely need to look at removing yourself from that down move for the time being. Let's look at the 4-hour chart. Of course, alarm bells went off when that crossed over. Going up on the afternoon of Friday, it has continued to move up. Now, you can see it has continued to reach about the same high point in the afternoon on the 10th and throughout the 11th. If it pushes through that weekly trend line, you definitely need to consider pulling the plug. You don't want to lose every single thing that you have earned since you jumped in if you've not already pulled the plug on that. So just be careful. And again, make sure that you fill out your trade worksheet and that you learn from all these experiences. And again, continue to watch that weekly chart and that 2-day chart. Weekly chart is, of course, your biggest, strongest chart. When it starts weakening significantly, that should always scare you in that weekly trend line. If it's broken, that should be a real alarm bell. And again, what's holding the market up? Couldn't tell you. We are trend following, and that's what we want to continue to do. We find trends, we follow them until those trends end and give us indicators to get out. Let's keep moving through. Where are we, of course, on the bonds? Well, we have been watching the bonds since they rolled over and started going down. Of course, we had that 2-day crossover going down back on the 30th of June, and we've continued to see over the last 2 weeks down movement. may have a weekly crossover coming up toward the end of the week if TLT goes down further. Of course, it was up just a little bit for the day. As we hone in on that 2-day chart, we can see that we do have the first day of the 2-day candle, a bit of green up movement, touching on but not penetrating through that 2-day trend line. As we look at our 4-hour chart, what do we see? Again, pushing on it, still well below, still below the 2-day trend line. It hasn't crossed over on it going up, but could be getting close to that, so continue to watch. Don't forget, we're still in an up move on the weekly. The 2 days in a down move. We don't engage in schizophrenia here. The weekly chart's up and the 2-day chart's down. We don't have a trade until and unless that 2-day chart rotates back over going up, or we have a crossover going down on the weekly. And again, we want to make sure that our big chart and our medium-sized chart are moving in the same direction. Then we have a backup on our short chart, which is either the 2-hour or the 4-hour, and we find a jumping in point. That's the traditional way that we do this. You want to know more about it, you need to subscribe to the podcast. With that, you will get a link to our How to Read a Stock Chart video, which is your introduction to what we do. Of course, all of that is free. You also get the layout from freestockcharts.com, the one we use at freestockcharts.com, plus the link to our PDF trade worksheet, daily market worksheet, and weekly market worksheet. Now let's keep pushing through these charts. Again, waiting to see if and when a trade develops in TLT. We don't have one now because we pulled the plug and took our profit when we had that rotation over right there at the end of June. What's going on with gold? Gold up 0.13% for the day. Gold's in a confirmed down move on the weekly vertical crossover and the 2-day. So as we sort of delve into things, we can see that our derivative oscillators continuing to heat up. Price percent oscillators moving down on the weekly. As we hone into that 2-day chart, we can see that it's continuing to move down. All the price movements well below the 2-day trend line. See what's going on this 4-hour chart as it slowly brings itself up for us. There we go. Now, this could be of some concern. Watch over it. If the 4-hour chart rotates over going back up, what does that mean? Well, that 4-hour chart tends to be an accurate chart for us. That could be a real signal in the morning if it crosses over going up on Wednesday to consider pulling the plug in a downward play. It has tried to find a bottom around 116.13 or so. Then it dropped off down $1 to about 115.15, and if it rotates back over going up in the morning or in the afternoon, now if it's floored out and drops again as it did back on the 6th, or really the morning of the 7th, that's all great and good. It does have room to move, continue move going down. However, it did sort of bottom out at about the same place back in May, although it did go much lower back in March. Well, it went about $1 or so lower. So again, continue to watch it. If it rotates back over going up on that 4-hour chart, you may seriously consider pulling the plug for now on a down move, taking your profit and enjoying that virtual money in your account. That is where we are, folks, as we end the day on Tuesday the 11th and go into Wednesday the 12th. Thank you so much for being with us. You have questions, problems, concerns, we are all ears. We love to hear from you. CW@chartingwealth.com. We just posted over the last couple of days a really great training how to use our trade worksheet. We filled one out for you, and you get to see what our thought process was. We have a chart there that we follow with you. We tell you why we wrote down what we wrote down and how valuable it is to follow your trade with that trade worksheet. It will supercharge your training just like the weekly market worksheets and the daily market worksheets do. If you're not doing practice trades, then you are missing out on, I'd say, about 60 to 70% of what you should be getting from our 10 minutes a day. God bless. Thanks so much. It's always good to hear from you and have you join us here at chartingwealth.com. God bless from the whole team here.